Lots of support now for Stephen Carroll. He's joining us here on set, and he's starting with the latest trouble at the Chinese property giant Evergrande.
The company continues to teeter on the brink of default, spooking global financial markets as investors wait to see if and when the Chinese government might step in. Evergrande is the world's most indebted developer. Its rapid expansion has been hit by a crackdown on property speculation in China. Authorities have already told banks the company won't make interest payments due this week. The company will also owe interest on bonds, though, from Thursday. In a letter to staff, Evergrande's chairman said he believed the company would, in his words, walk out of its darkest moment. Whereas on the subject of when Beijing might step in, the ratings agency S&P says it believes the government will only act if there's a far-reaching risk of contagion causing multiple developers to fail and posing systemic risks to the economy. So not much hope there from S&P that we'll get a rescue plan from Beijing anytime soon.
So how are the markets reacting to that then, Stephen?
Story drove a sell-off across global markets on Monday. Today, after that warning from S&P, shares in Evergrande down again around 1%. That's not as far as they were down earlier in trading, though. The shares in the company are about 85% down since the start of this year. This story weighing on the broader markets in Asia today too. The Nikkei in Tokyo down by 2%. Just small falls there in Hong Kong towards the end of trading. Shanghai and Seoul both closed today. In Europe, we'll see things starting to turn around. We've got gains across London, Paris and Frankfurt at the start of trading. Interestingly, travel and leisure shares among those seeing gains. Airlines getting a boost from that news. The US was opening up to vaccinated travellers.
Let's come back to France for this next story. Businesses are really grappling with rising energy costs.
It's a story that's playing out across Europe, in fact, as rising gas prices have sent electricity costs soaring as well. French consumers are being warned of hikes of up to 10% next year, but many businesses are already being hit by rising costs as they pay different rates for their electricity. Nicholas Rushworth has the story.
Fresh baguettes just out of the oven. And to make them, the baker uses electric ovens that are increasingly expensive to run.
We turn one or two off in the afternoon to limit the cost.
This bakery's monthly electricity bill has gone up above €3,000 a month. Baker Nelly Julien isn't happy about a hike in prices expected in the coming months.
Increases year on year become a real cost for everything else. We can't bump that cost on by increasing our prices, by passing them on to our customers. It's a loss. It's an extra burden that we have to take on once again.
Changes at the start of the year in France mean that 900,000 small and medium-sized companies no longer benefit from a state-controlled energy price. As a result, some businesses are paying double what others are paying.
Those customers and consumers that didn't plan for this are up against the wall because they are no longer protected by state-controlled prices. They have to make decisions based on market prices that are really, really high.
Heavy industry is a major consumer. Metal smelters have had 20% higher bills this year on average. Electricity is a third of their costs.
We need visibility to be able to invest. The tightening of margins due to electricity prices being extremely high, as they are now, would prevent us from making those investment decisions.
It's a long-term concern. The French smelting industry's electricity needs could rise fourfold over the next 3 decades.
Now, next to investigation that's been launched at a major video game company.
America's stock market regulator is looking into how Activision Blizzard handled allegations of misconduct in the workplace. The Securities and Exchange Commission has confirmed an inquiry is underway. The details first reported by the Wall Street Journal. It says investigators have asked for board meeting minutes, personnel files and separation agreements that the company had reached with some workers. Activision is already being sued by a California employment agency accusing it of fostering a, quote, frat boy workplace culture. Some 1,500 workers staged a walkout in July over the company's response to those allegations.
And finally from Stephen, there's a big day, in fact, for music. Now, this is on the stock exchange.
That's right. Shares in the music label Universal have gone on sale in Amsterdam as it starts a new life separate from the French media group Vivendi. The company counts some of the world's biggest stars, like Lady Gaga, among its artists. Although record companies were once threatened by piracy, Universal's profits have soared thanks to music streaming. The firm, before today's stock market launch, was valued at €33 billion. In the first few minutes of trading, shares up 37% in Amsterdam. A very good first day in the markets for Universal.
We should see if that keeps going. Thank you very much, Stephen Carroll with Business on France 24.